back to another case study. Today we'll be covering euro dollar. Did take a long on this pair today. Ended up playing out very nicely in New York. But yeah, let's get right into it. So start off here. Honestly, we'll just stick on the 15. What has price been doing? Well, what day is it today? Today is Tuesday. Yesterday, Monday, we ended up trading above previous highs. Okay, leaving equals here, and also this inducement low from the left. Okay, and as you can see, after we spiked again once, we spiked higher once again in New York, and then we sold off ever since. Came down to the low, respected the low, and then went long to where? This high right here. Okay, and that would have been, if there wasn't an available short opportunity, which we'll go through, I would have wanted price above here, right? Because you can see how we printed this low, printed this high, okay, and then price came back down, and then printed this high, kind of building like this trend line liquidity here, leaving all that, and then went lower, taking out previous lows. Okay, price came higher, respected this area, okay, leaving, again, all this liquidity here. All right, so the price then respects the low to engineer more liquidity to the lows, no problem. Go long to take out liquidity. This is screaming shorts now above here, okay? Shorts into here and then possibly here. Now, if we go in the hourly for a second, oops, these markings aren't showing. 1 second, guys. Cool, okay. We can see we have this wick over here that price has been respecting once, twice, okay? And what do we have right below? A clean liquidity block. Left, all right? So we have liquidity and then a liquidity block right below, which is perfect. We want to see price trade below the liquidity and then anticipate that when we get below here, that you can see a move the other way. Why? Because, again, liquidity block, okay? So go back to the 15 again. Actually, we'll even hang on the 5 here. Price takes the low, classic stuff, then takes the high to trap sellers. Anybody looking to sell below that high, they get taken out. Then we take out the highs to the left-hand side. We have news at 8:30. Okay, so this is going to play an important role here. Remember what I tell you guys, I won't be taking any trades before those news events. Why? Because typically we'll range before then, or we'll do some stupid stuff that like goes against the system. Why? Because it's just going to build liquidity, okay? Until that time, 8:30. So we'll keep skipping. Look how we even induce lower once more, leaving a possible high to get taken after. Respect the high, build liquidity at it, okay? We end up even respecting this liquidity block at the lows. Oops. Respecting this and going long. Okay, now we're approaching 8:30. Okay? So, again, look at the liquidity we've left at the lows. We just took this internal, okay, trap sellers, okay, and left all of this at the lows. So just anticipate a nice move to the downside here, which we do get, okay? Taking out these equals, which was obvious. And then don't forget we have this wick to the left that, again, look, we traded into it once here, twice here, and moved away to the upside, telling me we have liquidity below here. Okay, and again, liquidity block right below. So we want to see price trade below here. All right, let's get rid of this vertical line. Apologies if you hear my phone. I just have to have it on right now. I'm waiting for a phone call. Okay, so we continue selling off. Perfect. Finally, we take the low. So how can we take this entry? So we've spoken about it a bunch of times. You can take this sort of entry if you take it, when the liquidity is taken, aka this low, and then you'd have to cover the liquidity block, which gives you an 11 pip stop loss, which isn't that ideal. You would have to target all the way back at the highs, even more, to get that 1 to 3 at least. So in order for us to take in this extreme entry, I would say we'd need price in here for it to make sense RR wise. Okay, and I believe we don't come that low, but we'll see here. Yeah, we don't come that low. So no extreme entry was available. What happens here? Price is now taking this high, left an inducement low. I want to see a buildup occur. Okay, guys, remember this is the most important part. I want to see that liquidity built. Okay, now look what happens here. On a very small perspective, take out the previous high, price returns back into this area. Respects it and moves away. Okay, so now we're building that liquidity below that low I got marked out. Okay, we'll make it a thick one so you guys can see it. But below that low, which is perfect. Why? Because what do we have right below that is a liquidity block. So once that liquidity is taken, that thick black line, all buys are going to be valid after this liquidity is taken. Now, again, you could be a little bit more greedy and wait for the imbalance to get tagged or the extreme M1 imbalance, which is right there. You can't see it, but in this area here, okay? But again, like I've spoken to you guys before, I'm not bothered about getting the most pinpoint entry. Cool. And then we start coming back to the low. Look how we still respect the low here, inducing more liquidity. We also take out, look at this structure we got here. So we take out previous low, okay, price comes up, then takes out the high. So retail sees this as BOS. So this is going to be a buying area for retail. They're going to get trapped, okay? So we want to see price below here. And not only below here, but look where the red box is, okay? Below this line here, because that's where the liquidity is. We take it, perfect. Okay, that's what we want to see. Then price goes long for a bit, no problem. What does it do? It's trading back into this area retail is going to be selling at, okay? So we tap into it, and we actually move away. Now we have liquidity there. So we can mark that on. And then finally, we end up trading lower. I was waiting for an entry below black line when that liquidity is taken. So there it is. Entry. Stop below the liquidity block to the left. Okay. And I was targeting. So yes, this is an inducement high, but be aware that we haven't respected this whole area yet. So what you can expect and anticipate is possibly false reactions, right? Maybe we go long and then go short here for a bit. And I don't want to deal with this whole pullback. So I went on the hourly, and all I did was, well, skipped in front for some reason. I put a black line at these lows here, basically like the 1 hour liquidity block area, and I wanted to see price into that area, and that's going to be my target. I'm going to close 80% there, and I'll let the rest run, no problem. Okay, so unfortunately, replay mode bugged out, but this was the entry. Okay, you can see I went a little bit deeper, no problem, and then we kicked out and went long. Very, very beautiful. And pullback. To continue higher. Let me skip a little bit. And there it is. Perfect. Very, very clean. Straightforward. Okay. Again, could it go higher from here? Let's check out and see where it is right now. It can easily go higher. This whole area can be respected, but I'm not too bothered. The RR on this was a 1 to 5, which is more than enough for me. And yeah, that's the target. Entry being down here. Super, super clean stuff from EU. We can back out and look at this on the higher time frames now and see where we're at. But just like this. So super clean stuff, honestly. Again, this area can be respected temporarily, maybe provide a little bearish pullback, but I wasn't too bothered being included in that pullback, so that's why I partialed right there at this area at 108.939. Alrighty, but yep, that wraps up this case study. Quick one, but clean as ever. I hope you guys enjoyed, and I will see you guys in the next one.